Jack. Great to see you. Thanks for joining the Bainbridge podcast.
Yeah, nice to see you too. Thanks for having me.
The term polymath gets used a lot, but I think it applies to you especially. When you look at your LinkedIn, you look at your background, you do so many cool and interesting things. And I can't do justice to it. I wouldn't do justice to it. It would be awesome if you could kind of give a little bit of your background and what you're working on, particularly now.
Sure. Yeah. It's funny. I was just talking about polymath yesterday. I think that in the beginning stages of a startup, it kind of requires a sort of polymath type of operator. So I wouldn't sell yourself too short as the CEO of a seed stage startup. Is the kind of colloquial way of saying wear many hats is maybe more in a fancier way as being a polymath. So I think that for me, I've always enjoyed the early sort of stages of building a company that require a lot of different, hat wearing or, skill sets. And so, starting back from moving to San Francisco and working in technology startups, it just, the beginning days require you to get your hands dirty in a lot of different ways. And so for me, it tended to be more about growing the company. And that comes in kind of three flavors as far as I see it. One, you got to have the resources, so raising money. Two, you got to have the sort of people necessary to build the product and service the product. And then three is ultimately going to getting customers, so business development. And so kind of all of them, I'd say, center around one particular type of science or math, which is storytelling, or, storytelling such that then things happen as a result of your storytelling. And so I've always enjoyed that in the variety of flavors of recruiting, fundraising, and sales. And so that's the kind of philosophical high level. But then more specifically, what I'm doing today is, historically speaking, I've been focused on building one company. And so, most recently in the e-commerce space, I was the chief strategy officer during the early years of Bolt.com. Before that, I was at a different enterprise SaaS platform, building out the sort of early go-to-market. And so for me, I'd always kind of had the itch to work on a lot of different things. It was never enough to kind of just be working on a lot of different lines of business within a company. I always like working on different projects, different companies in different ways, whether it be a services business or a product business. And so finally this year, I kind of broke free from once being very focused as a founder or as an early stage employee on one company. And now I'm doing everything from, I have a venture fund called Impatient Ventures. I have a consulting practice where I help early stage pre-seed and seed companies kind of get to product market fit, get to their next stage of fundraising called Impatient Consulting. I have a performance marketing agency. I'm doing some small M&A work. And I always feel kind of, I feel sheepish sort of, or I hesitate to talk about working on so many different things. But for me, I get more energy and I'm more motivated and I'm more excited and I work harder and longer and I'm more focused actually when I have several different things going on at the same time.
Did you always know that about yourself, or was that something you discovered?
Yeah. I mean, it definitely, it goes all the way back to not wanting to do my homework and wanting to, I was a big poker player growing up. I played a lot of online poker. I was an athlete. I played a lot of different sports. I was at one point I was a competitive Risk player. If the world.
What? There is such a thing? I didn't know that.
Yeah, there is such a thing. So I think I've always gotten excited when I could kind of bring ideas from one conversation and with amongst a group of people into another conversation. And so I've always liked kind of moving around people and ideas and. So yeah, I've always, I think, been that way. And so now I finally feel like I've gotten to a place where I've had enough of a career, so to speak, 10 years in to have enough access to be able to work on a lot of different things with a lot of different people.
Yeah. As you were talking, it sort of made me wonder, because it's a great fit for you, this ability to do a lot of different things, and you're energized and actually more focused as a result of it. I think there's a lot of founders share that, that kind of like can go in lots of different directions and they enjoy that. But do you think that founders overindulge that, or is there a way to, do you see them making mistakes in that, or are there ways for tips for listeners to channel it better?
That's a hot topic, right? So I think in the kind of 2020 2021 super hot sort of end of the decade bull market we were in, I think it became popular for multi-company CEOs, CEOs that also had venture funds. I think taking on the CEO position is a particularly nuanced thing where part of it isn't just the time you're spending on it, but also part of it's your ability to motivate the people that are working, for you, with you. And so I think part of it can be an image problem if you're sort of seen as, the dad that's raising several families. It's kind of hard to get your kids to, really take you too seriously. And so, there's and there's a whole subset of people, obviously, the Aubrey Marcus followers that kind of believe in this sort of, speaking of polymath, the poly lifestyle
Yeah.
of that. I'd say that I'm a more of a traditionalist in believing that, good parenting comes with being able to really have your kids be able to know that you're there for them, you're going to guide them, you're going to protect them, they're going to trust you as a result of that. So I think as a CEO, you're sort of in a coveted role. I think CEOs who also invest, whether it's angel investors or maybe they have a small fund because their investors want to capitalize them to just casually have their existing social relationships be able to be investable, right? Which was a lot of how I got into investing as a founder. I was connected to so many different founders, and it was a very natural process to go from investing my own money to investing other people's money into the deals I had access to. But it's a very interesting question. I've been working with a friend that's working on a talent marketplace around, there's also the big sort of controversy around the engineers that were getting second jobs.
Yeah.
That. And so I think the really interesting question is that in the remote work era, where people aren't needing to commute into work, they're not needing to be at their desk 24/7. Could it lower the cost of your, I guess I'd almost throw the question back onto you. I mean, you're an early stage startup. It's hard to say this, but if I could tell you I could cut the cost of your engineers in half by saying, hey, you're going to allow them to get second jobs, but they're still full-time getting their job done, executing, would you be open to that as a CEO of potentially, multi-jobbed, multiple employed, team on your side? So I would flip it and ask you, would you be okay with your employees having second jobs if it maybe lowered the cost? No. Yeah.
Because I think that well, particularly at our stage, we're 6 people, maybe we'll be at 10 by the end of the year. You just got to be all in. And so I don't believe that there's this like idea that like, oh, I work 40 hours for you and then I work 40 hours for company B. Like, I want to know that somebody is willing to put in 60 hours or more if we need it, and also, I also don't believe, if you're really working hard, it's taxing and you need downtime. So I don't want somebody, to be like taxed twice and then they have no downtime. So my theory on it would be that I'm getting, 75% of their quote unquote full-time effort. But, maybe that makes me, I probably just like eliminated a whole raft of engineers from ever working.
Well, yeah, I mean, I'm a big fan of pulling some of Don Draper's points of view from Mad Men, which is, when asked kind of how do you come up with your best ideas, he says he goes and watches a matinee, right? So his mind's completely off the thing he's trying to solve for. So it's like, there is that delicate sort of subjective line in the sand of like what is considered work outside of your full-time sort of W-2 job. So I think that like in a world where you can enable employees to get their work done and then go, do a Pilates class in the middle of the day, or go, maybe they've got some kind of advisory work where they're helping some other startups in a particular area. They have a skill set. And I think that ultimately I think we're in the era of kind of, I would say I'm going to coin something here. We're in the post-vacation, employment era where I think it used to be you just work really hard 9 to 5 every day and then you take your 2 weeks. Or whatever. And I think that's kind of a fluid thing now where really it's meant to be like, how can you take kind of vacations, but they don't necessarily mean you're flying to Tahiti for a week, but you're going and doing like some sort of a workshop for a weekend, or you're helping your buddy out with some marketing materials for his new agency business or whatever. So,
very Churchillian. That's what Churchill would do. He had all these different efforts and activities and workflows. So like when he was done doing one thing, he was like a build brick walls and paint and do all these different things to keep it, but he very rarely just took vacations and hung out. So,
Yeah, it's definitely not my speed. I will occasionally get motivated and I'll go and what I like to do, especially I've finally started to take advantage of the remote work era where I'm going to be in South America for most of January, but I'm going to be working
nice.
the whole time.
Yeah.
I got a friend who's from Argentina, and I'm taking advantage of the opportunity to be local with a local, or be in a foreign country with a local. But I'm
Yeah.
going to be working the whole time. And for me, it's a form of vacation, in that it's just an environment change.
Yeah.
And so I'm super excited. I did that. I tested that with a little bit of difficulty because of the time zone. I was in Spain and Portugal in June and worked 5 hours a day, and then of course I'd indulge a little bit more on the eating out and the drinking and whatnot, but within reason. And so I struggle to be the type that like has an away email for a week and doesn't talk to anybody.
Right. Yeah. It's hard. Really
It's
hard.
hard. Yeah.
Hey, so I want to talk a little bit more about Impatient, but before the VC. But before we do that, it struck me that you see companies from multiple angles, right? So, like as the VC, you're seeing them as like the recipient of the pitch decks, and putting on their best face, right? As the consultant, you're now like, oh, I'm actually behind the curtain, and like, this is messier than is presented, in the deck. And then on the agency side, you're seeing a very specific part of the customer acquisition. I mean, not necessarily all three in the same company,
But
but
sometimes,
oh, that's cool.
yeah, yeah.
So, what do given those that you get these like really unique angles, because that's like nobody gets to do that. What do you see are like maybe common traits of success or common mistakes?
Yeah, good question. Again, going back to what I said earlier, I sometimes feel a little embarrassed. I always kind of scoffed at the people that were like, I'm a private equity, M&A, venture capitalist, serial entrepreneur, whatever. Everything for me was really organic, where I was kind of, the investing stuff was organic. The same way starting a company, it was just kind of like, I didn't force anything before it felt like it was sort of ready to blossom, so to speak. And so I've been fortunate by being perhaps a little bit risk tolerant, bordering on careless early in my sort of 20s, that allowed me to make a lot of mistakes and still survive the other side of some of the fallouts from those mistakes. Called having loving parents and good friends that allowed me to kind of make mistakes early and recover. And so I think that that arguably I would say is a good characteristic of kind of the early founders and employees at a startup, are willing to make mistakes and be able to recover. So some people call that resilience. Some people call that being dynamic. I mean, there's a reason why the word pivot is such a common, almost cliche word in the early days of a startup. It's because your every day is arguably a micro pivot, where you're taking in new information you didn't know yesterday, then having account to how that shapes your product roadmap, your customer acquisition strategy, your customer retention strategy, your partnership strategy, how you're thinking about your marketing, how you're presenting the company, who's working on what and how. And so, I'm a big fan of the lean startup method. In fact, I was just talking to, as Patty on my team at Impatient
Yeah.
Consulting, about that methodology. I think that's a 100-year methodology. I think that the idea, if you're not familiar with the book,
Yeah.
I highly recommend it. Eric Ries, who was kind of an early agile software adopter in the kind of sort of modern day Silicon Valley, where it's how are you the most efficient and the least exhaustive in terms of going to market with some sort of a plan, whether it be a sales plan or a product plan, such that you can not get bogged down by exhaustive planning, and then be able to put a plan in action to collect data to iterate, right?
Right.
Iteration is kind of like the dynamic evolution of pivot, which is you take in information that then changes your perspective on how you see the business and how it should best be run.
Yeah.
So I think that quality of being able to being willing to make mistakes and not allowing the kind of natural outcome that all humans experience, which is letting your emotions kind of either prevent you from making mistakes or letting those mistakes, bog you down for too long.
Right.
We are ultimately an imperfect sort of system of operation, right? Being that we're emotional. So I think that the ability to, and again, and this is where it gets into kind of the Buddhist sort of way of looking at it, is being okay with any outcome, and
Hmm.
not allowing a negative outcome or a positive outcome to pull you too much to either side. You could have a positive outcome, and then you could end up doubling down on something that once you double down, it doesn't work. Maybe it worked the first time, it doesn't work the second time,
Right.
or something doesn't work the first time, right? Whether it be a sales acquisition strategy, a marketing, a media plan, a marketing campaign, a fundraising strategy, right? You just went through this process yourself and
Yeah.
probably dealt with a lot more no's than yeses in the fundraising process, and it's so easy to get discouraged. And you hear this time and time again. The Airbnb story being the most famous, where it was like 99 no's and 1 yeses, and now it's a $100 billion company or something like
Right.
that. So I think not getting bogged down by the no's, making early mistakes, not getting too emotional about it, and then continuing to stay agile so that you can, continue to iterate and improve the efficiency, and give yourself the most access to opportunities early in the life cycle of a company.
Yeah, that's fascinating. There's a lot there, so I kind of want to dive into
Mm-hmm.
one of the first parts. Like, the that Buddhist philosophy is really interesting because I was thinking you're like, well, not being afraid to make mistakes. For a lot of people, that's very difficult, right? Because their ego is so tied into, that the outcome has to be right. So then they get caught in this process of like, well, we're not ready, maybe to your point, like over planning or not getting the product out there. So is it just removing your ego, or is it sort of coming to the realization that like, nah, I'm okay with the outcome? Like, how do you get past your fear of failure?
Yeah, another interesting topic I've spoken about recently with some friends is, I don't think it's about removing the ego. I think it's about discerning between what I would maybe simplistically call good ego and bad ego.
Okay.
So good ego is like you get up in the morning and you're motivated to get up in the morning. Like if you didn't have any ego, I think you'd just kind of lay in bed all day, right? You wouldn't
Right.
really have a reason to get up. You're like, all right, I believe you have purpose, right? Positive ego is typically pretty aligned with purpose, where you're
Yeah.
like, I believe I'm capable of being useful and offering something to the world. I believe my skill sets are worthwhile.
Yeah.
I believe my opinion matters.
Right.
Uh, I think bad ego is believing that version of your ego today, of what you believe is a good opinion, a good skill, or a purpose or a meaning, is going to stay that way forever. I think that in the world of continuously evolving yourself, right? And that's again going back to the making mistakes early, taking in information. It takes an ego to make a mistake in a way. Like again, I think ego is often seen as a very binary thing, good and bad. But I think there's a version of ego where you had enough conviction and enough confidence to make a certain decision, and then maybe it didn't work out, and so the good ego allowed you to both make that decision, and then you then had enough you know uh what's the way to call this, you had enough of and then you had a lower on the bad ego that you were willing to both admit the mistake, admit where it was wrong, take in new information, recalibrate. And
Yeah.
I think it's a distinguishing between good ego and bad ego. Good ego is dynamic. It's resilient. It's dynamic. Bad ego is very stagnant, very stubborn, only staying with
Yeah.
that perspective you have and being unwilling to change.
Yeah. Well, that answers my second question, which was like, how do you recover from the inevitable mistakes? And it sounds like don't let the bad ego.
Don't let the bad ego. And I think part of that too is I think bad ego also doesn't know how to ask for help. Good ego does. You're confident enough that you're willing to go ask somebody for their time. You're going to willing to ask somebody for help. A lot of times people are afraid to ask for help. I've been somebody that early in my life sought out mentorship. I mean, I think I emailed the LinkedIn CEO when I was in college. He didn't give me the time, but I was willing to kind of go, and that arguably borders on arrogance, but I was unafraid to kind of get into rooms before I maybe was qualified by whatever standard society looks at who's merited to be in a room. But I cold LinkedIn, I cold called, I asked for introductions to get people's time so that I could learn how something works, to get a job that I wanted, or to get an introduction that I needed. And so, and I try and, in the spirit of kind of all that I took from the world, try and offer that back, so that whenever I get asked for help or whatever, I of course I'm evaluating the person. I'm not just going to open up my Rolodex or
Right.
whatever my time, but I think that the kind of what goes around comes around, sort of like reciprocal nature of like being a good actor and paying it forward. I think that relates to good ego versus bad. And so I think a big part of this is being able to recover from mistakes is partly in your own humility, but then it's also having the necessary people foundation in
Yeah.
addition to your own foundation to be able to recover and get support where you need it to. And some of that time in my life was failing at my first startup and having no money and having to sleep on friends' couches. I mean, it was like I lived that very kind of cliche, and it was intense. It sounds kind of cool in retrospect that I worked out of a garage, failed, and then was sleeping on friends' couches because I
Yeah.
couldn't afford rent. I would never recommend that to anybody, but I was very lucky in my life to make some crazy mistakes. And then I had friends that were willing to let me kind of bring my suitcase, over and sleep at their place for a week. So
Yeah. That's good. So let's look at the other side of it. Like any common mistakes, or, I mean, obviously the absence of what we discussed can lead to mistakes, but do you see any commonalities or mistakes that CEOs, particularly in like the kind of earlier stages, are making?
yeah, I'd say sort of two things. I mean, I'd say at an individual level, the mistakes can be believing your own bullshit kind of too strongly, where you may have a sort of, and I made this mistake actually when I was the CEO and founder of my last company, where I was setting out for a big mission statement around personalized medicine. And yeah, I had a lot of gaps in my understanding of how that actually got accomplished. And so I hired a lot of really smart scientists and engineers to kind of help me march towards that vision. But I didn't realize, as the CEO and as a very strong voice and opinion, I think I was shutting off a lot of other perspectives that should have reached the surface. So sometimes it's hard to sort of see beneath the surface what somebody's really thinking versus what they're expressing.
Hmm.
Especially because me, I'm an extrovert, so I'm always constantly willing to share and be open. I'm a fairly vulnerable
Right.
person too. Not everybody's like that. Sometimes people take a little while to kind of warm up and share what they really think.
Yeah.
So I think I treated a lot of the world the same, and so I'm mapping my own mistakes onto people, which is recognizing your own power and your own influence, so
Yeah.
that you're recognizing where sometimes you may be blocking unintentionally information that should be coming. Like if you're a good general, you want your soldiers on the front line, or your commanders in the middle of the front, to share if there's potential issues going on, right? That should flag
Right.
back to you. If they're too intimidated or unsure of how to kind of communicate that because whatever reason, then you're unintentionally blocking insights and perspective that I think I blocked early on in my sort of CEO foundership role. And I think I believed my own, like I said, BS too strongly. And so I was unable to, I went from kind of pitching the venture funded story and raised a couple $1 million to needing to level head myself a bit, in terms of how to actually march towards this big, lofty kind of
Yeah.
dream. And what I'll say second to that, to wrap the point up, is I think sometimes there's a perverse incentive between what VCs want to hear from founders when they raise versus the practicality of getting there. I
Right.
think VCs are swinging for the 100x or bust, but they won't admit that they're okay with the 5x.
Right.
I mean, they're fun if you think about it, as underwriting to called a 4 to 6, I think is the standard kind of returns. And then like, if you kind of go like 6 to 8 or 8 to 10, you're killing it. 4 to 6 is great. 2 to 3 is all right. But if another way to get to 4 to 6 is if you bet on a bunch of companies that provided 4 to 6x
Four to
returns.
six. Right.
Whereas I think a lot of times the investor approach is, I'm going to have 90 losers and one
Right.
100x that's going to return the whole thing. So I think that oftentimes for me, I took it very, very emotionally and seriously, that like if I wasn't getting early traction and product market fit to get to that $10 billion outcome,
Yeah.
uh, that I kind of felt like I had a sort of all or nothing mentality, and it didn't allow me to kind of simplify the steps it took. I'm sure with you probably have so many things that you want to build. That's probably multiple years out from having the
Yeah.
resource time to be able to do that. And so it's like prioritization is I guess the simple way of looking at it. How do you go from pitching a big vision to investors and getting funded to go towards that big vision to saying, all right, what's the 30-day plan? What's the 90-day plan
Yeah.
to get us there?
Going back to what you were saying about not shutting yourself off from feedback, it's incredibly. I think one thing that first time founders or CEOs don't necessarily realize how loud their voice is in the room. It's maybe not intentional. So
Yeah.
how do you correct for that? Because just being like, "Hey guys, tell me anything," isn't going to get the trick done. Like, have you seen any good techniques for really eliciting the truth from the team?
Yeah. I think having structured one-on-ones that incorporate a very sincere, uh, uh, reciprocal feedback session of the good and the bad.
So, what would be an example of that? What would be a good structured one-on-one?
I think having one where there is dedicated. So I'm sure. I imagine if you don't, you probably plan to have some sort of one-on-ones with the people
Yeah,
you manage, and then maybe your co-founder.
yeah,
Or you have one co-founder, or you two co-founders.
one.
Yeah.
Yeah,
So I think having a dedicated period of time that's consistent, so that like somebody knows that there is a consistent period every week. So let's just say, you're managing an inevitable sort of head of sales that you'll hire, right?
right.
Imagine that you're the head of sales, and that eventually you're going to hand that over to some senior person. If that senior person that you're managing knows there is a 10-minute period every single week in their one-on-one with you, that they're going to be able to have a good and bad feedback session of tell me something that's not going well and tell me something that is going well, and that's top of mind, and don't overthink it. Just like I don't like the way that you interrupt me in meetings, or I don't think our product is ready on this front, and we're getting a lot of pushback, or I have an issue working with so and so. And then
Yeah,
on the flip side, the good, right? It's always good to have both. So it's sometimes you can call it a shit sandwich, where you have kind of two pieces of bread that taste good, and then one piece of crappy whatever that's in between there. So I think that having that dedicated time also then prevents chaos, because otherwise if somebody, it prevents two things. It prevents chaos, where it's like arbitrarily you're like, hey, I need to talk to you, or
right.
whatever, and then
It's
like
too
that,
late. Yeah,
and then it's too late, or it's in the middle of a flow, like that something else is going on, you're solving some other problem,
yeah,
and like, hey, I don't like the way you look at me, or whatever.
right.
But if that 10-minute period is sort of is very sacred time, that I know, like if I'm your head of sales, and I know that I have this 10-minute period in my one-on-one with you every week that I can give this feedback, I think that it starts to kind of create some structure around the chaos, but also gives a very dedicated sort of confessional, so to speak, to be able to
Right.
get it off somebody's chest. Because the other issue that also happens is, one, you have maybe the vocal person who will just give you the feedback arbitrarily, and then we don't want that, because we don't want just arbitrary emotional perspectives kind of flying while we're in the line of duty. But and then so that's one. And then the introvert might not be ever willing to share it, because they're just kind of keeping it down inside. They don't
Right.
know if when the right time to do that is. So you're preventing the extrovert from just like spewing it, and
Right.
and then giving them that dedicated space, and then you're enabling the introvert to know that that is a safe space to communicate the issue that they're having, that you want to know, right? You don't want them to bury it down inside.
Yeah.
So I think having that dedicated sacred time in a one-on-one setting where it's safe to kind of speak your mind very clearly. And then I think the other thing I'll sort of finalize this with is I think it's important for you as the leader or the manager or whomever is conducting the one-on-one that's receiving that information to actually offer the exact same thing back to that person, so that it also kind of, it normalizes it, where it's
Right.
not like this, like, this person looking up to you and sharing, but it's like you guys are both sharing the same set of
Yeah.
feedback, good and
Right.
bad. And so, yeah, I think that's a good way to,
Is that the
you know,
key to a good structured one-on-one, or are there any other elements?
yeah, I mean, I think that the one-on-one too is an opportunity to go through critical KPIs. So there's obviously just the tactical stuff. Like I've had early in my career, I had one-on-ones with the CEO that at one of my first jobs where I was leading revenue, where it was just like, "What's up?" It was just kind of a time to talk, and
Mm-hmm.
I naturally took the reins of that because I'm a pretty vocal person to kind of speak my mind on things, but it was a bit arbitrary, and I felt like oftentimes we'd walk away and there wouldn't be actionable steps. And
Yeah.
so I think another thing is that whatever you fill that time with, make sure there's some sort of a progression, so that the next episode in the
Hmm.
TV series has a progressive plot, so
Yeah.
that like your next one-on-one might be there might be a specific actual step, and then what you can do is in that one-on-one review the one-on-one from the week prior and sort of see what was our actual steps, what were some of the concerns, what were the positives, see how things
Yeah.
went. So it's always good to have a basis of comparison. So, oftentimes it can just be a way to kind of track what's going on KPI wise. If it's sales, how was our sales for the week? And whatever measurements you kind of want to
Yeah.
put in there. The actual the feedback piece, and then making sure you kind of cover a reflection period of what was the prior week's one-on-one.
Yeah. Wow, that's super. That's great.
Yeah,
That's like a hey, you just wrote a book right there. It's
yeah,
a
I know, it's
bestseller.
funny. I got to make sure Patty actually heard this so we can incorporate that. I think the impatient consulting one-on-ones.
Yeah.
Uh, yeah.
And then you said a second thing was lack of prioritization. Any tips on prioritization?
Yeah, certainly a delicate dance, right? I mean, I think on the one hand, you as the if I'm speaking to kind of a leader, right, and the CEO or founder or co-founder, it's like that's a little bit of it's part art, part science, right? So like some of
Yeah.
it's going to be using as much data as you can to prioritize, and then some of it's just intuition. I mean, part of my betting as an impatient investor is I'm betting on people's ability to have that sort of gut intuition and that sort of ability to kind of traverse the guerrilla warfare that is kind of building an early stage startup,
Yeah.
especially through the period of getting product market fit, where there isn't an exact uh, clear set of instructions. I kind of describe that the earliest days of building a startup is, maybe you've driven a truck, a semi truck before, but now all of a sudden, or maybe maybe you didn't even drive it. Maybe you were like in the front seat or you were in the back of the truck or whatever. But now all of a sudden you're driving that pickup truck with a blindfold on, and the truck is driving on a frozen lake, and you got to get off that lake onto the road. So, I think that a lot of it is kind of a gut feel.
Hmm.
You have a sense of how the truck moves. You have a sense of how ice breaks. So there's a sort of like, where you speed up, where you slow down. Um, and, I think that prioritization is just a constantly evolving thing, which is why I like the lean startup methodology of kind of don't overthink it too much. Don't create too much of a structure and an elaborate sort of plan,
Hmm.
but test as often as possible. Have a basis of comparison so that you can A/B test and say, hey, well, if you're prioritizing, well, you're prioritizing against other things. So you're going to naturally need to make trade-offs,
Yeah.
um, and just you'll continuously the same way. Like I remember my first car when I was 16 was a manual car. I wanted to get a stick shift car, and
Yeah.
I still remember those early days of like having to like look as I did it, RPMs, and then and eventually it just kind of became a thing where
Yeah.
you could hear the engine and you knew the timing, and it just kind of works, right? And then you can get a faster car next. And so I think it's just kind of in the beginning days, you are really critically thinking about it and comparing data and trying to do as best you can, but don't let too much time pass before you make a decision. And then just know that whatever is the outcome of that decision, good or bad, it'll be informative, so that the next time you have to prioritize, you're going to be even more uh, uh, smart. You're going to be smarter about how to do that prioritization. So constantly testing, appreciating that trade-offs are inevitable, and then eventually kind of build up that intuition that most founders should have innately. That
Yeah.
just you get into harmony with it. You get closer to it. The more decisions you make, the more time you make. I mean, the last thing I'll say is, I think a lot of times Silicon Valley kind of really, really championed the kind of young Stanford, Harvard dropout to be the founder. And that can be certainly cool because that person's obviously gifted young and confident enough with an ego that allows them to be able to believe they can make decisions for within the context of something they've never made a decision on before.
Right.
And I think that can be good to an extent because in a way it creates, there's a certain level of fearlessness, and clearly the person is gifted naturally. But I can tell you that, me now being 31 years old, I feel like I'm actually 1 years old in terms of my understanding of how the world works in both business and frankly the social world, where I finally feel like I've gotten to the other side of a lot of naivete and a lot of anxiety I had around making very blind decisions.
Yeah.
So I've been humbled by time
Hmm.
many times in my life.
Yeah. That's a
And
good
so I
phrase.
think I have an appreciation for experience, but I still want to punch above my weight class constantly. I mean, that's where the fun exists, right? It's
Right.
fun. It's fun to get in the ring in the weight class that you haven't fought in before. Um, so I'm constantly doing that, but I feel like now I've been in the ring enough times. Even maybe I haven't taken as heavy of a punch before, but I've taken enough punches to know what it looks and feels like and sounds like.
Yeah. Uh, I'm going to switch gears a little. I mean, this has been fascinating, very much personal development, and I want to switch to like kind of the market. So for future listeners, it's October 27th, 2022. Not the easiest, there's certainly a challenging period for a lot of companies, particularly in ecom. You have this interesting, perspective across your three um, efforts. What are you seeing in the market?
Yeah, I mean, I think the classic one, right, is everybody kind of pushing for profitability. I think, and it makes sense, right? When interest rates were zero, which they effectively were for 10 plus years, money was free. So it was like grow at all costs because we're all kind of operating off of a money tree right now. And so
Mm-hmm.
in a world where you have 0% interest rates, PE ratios could theoretically be infinity. And so it was okay for companies to lose a lot of money. And so I think the era that sort of created especially the millennial D2C, millennial D2C class of the Allbirds and the Warby Parkers and the Tom Shoes and the likes. I
Mm-hmm.
think that those companies came in an era where one, it was cheaper to market on Facebook. You could throw $1 in and get $4 out. Now you throw $1 into Facebook as a brand and you're doing well if you get $1 back.
Yeah.
Assuming that you can create retention, you can get profitable on the second order and third order. So that's from the consumer standpoint, and that's now creeped into SaaS as well, where I think there was an era where money was just going to continue to flow. So growing at all costs to disrupt the incumbent or build something new was certainly supported by the capitalists, as so the operators could take more risks, knowing that they could raise money whenever they needed to. But now you see all these valuations that kind of came, especially out of last year and the year before, that are being slashed dramatically.
Mm.
Instacart, Klarna, a lot of companies going down 70, 80% in valuation, which is a huge drop off. But granted, they were fresh off of going up 80 to 100 to 200% in short
Yeah.
order, actually having the progress in the business. So, I think that you used to be able to raise a Series A off of like 500K in ARR, 100K in ARR in the SaaS world. Now it's definitely closer to like 3 to 5 million. And that's because capital is more expensive. And so in a world where that doesn't seem to be changing too much, we are definitely moving towards an era where, I mean, you even saw, I don't know if you saw Shopify's earnings today, right? They had good earnings. The company was up 18% in the news, but the most notable headline was the CEO um, saying, we are going to return to profitability. That is going to be our plan going forward. So I think that sort of is a big part of it. And I've got some other theories about sort of what the sort of future state of the next generation of kind of sort of SaaS 2.5, right? Not to be confused with Web3, is looking like. You guys are certainly in that class of next generation of companies. So I think profitability is definitely one where capital is more expensive. I think you're going to see a world where people want to be able to do more with less. I think that the world of best of breed was, I think, the last generation sort of mode of operation and innovation. But I think you're going to see a lot more consolidation, a lot of M&A.
What do you mean by best of breed in this context?
So best of breed, right, used to be that in the sort of methodology of like, if you're procuring or implementing software, if you run a company, best of breed would be taking a given sort of tool or product or platform, or rather, it's, instead of getting a platform that does everything, you take, it's the hub and spoke model. You buy the spokes that do the individual thing. You get the best payroll system, you get the best project management system, you get the best customer support system. So you're buying basically individual as opposed to buying one platform that does everything.
Got it.
Yeah. So I think that the era kind of going forward is that you're going to expect more for less out of your platforms, right? Such that it'll be able to provide, what maybe 5 years ago you could get away with just doing one small thing really well, and there'll still be room for that. But that needs to be very innovative. I think the period of kind of innovation was you took a lot of offline atoms, bits versus, in the world of bits versus atoms, you had a lot of services, atoms-based sort of businesses that existed that were then digitized. FinTech and SaaS kind of being two of the bigger areas. And now I think you're kind of moving where that worked, and there's a unicorn payroll company. There's a unicorn cap table management software platform that, again, previously was just a crummy, services business with a website. And so I think now you're going to need to see a lot of consolidation, where you're going to see the big players needing to stay really relevant by acquiring smaller products, best of breed products, to kind of bolster their platform offering. And then I think you're going to see a lot of the new age companies doing a lot more out of the gate. So I'm an investor in a company called Party Round that just rebranded to Capital, and they're going to be consolidating several different financial tools into one unified platform. So I think we're kind of in the like post API world, where there's a lot of as a service back end services. Allow you to build a variety of front end services with your own user experience, consolidate it, organize it. And so I think you're going to see a lot of next generation platforms that do a lot more, a lot faster, and one consolidated experience. And then anybody that is kind of a best of breed sort of individual, sort of like focused sort of product, is going to require a hell of a lot of innovation to be relevant. It's going to really be able to be an innovation on the product side, not just on the, the business, or not on the model of like, SaaS, just kind of offered a subscription service, cloud-based software. So that's kind of a bit of a thesis I have.
Do you think with the sort of broader platforms that you're describing, is the customer making the choice that like, well, it might not be great at a lot of it or everything, but it's good enough, but it certainly is the right price? Or are you saying that like, no, these platforms are going to be great at everything, there's no compromise in choosing them?
That's a really good question. I think I'd say that if the if the provider, right, the product or the service is doing a good job, then they're able to demonstrate their ROI very clearly, right, such that the buyer knows exactly what they're getting and why it's valuable. And so I think demonstrating ROI, I think ROI was a fairly loose fitting thing for a while because you could kind of just like make it like, yeah, this is cheaper than what you had before, and yeah, it seems a
Yeah.
little easier to use, and it kind of just like back of the napkin and be like, all right, let's do that. Like, and
Right.
again, everything's just getting tighter, right? And I think I made the point earlier about how you used to be able to throw $1 into the Facebook marketing machine and get several dollars back very easily without needing to run a very sophisticated A/B tested
Right.
you know, paid media campaign. But now you need to be real like at the on the agency front. Uh, the agency is called MediaWire, and I partnered with a guy there who came up through the infomercial world where he understood direct response marketing so clearly and it was a lot of A/B testing, really small things.
Hmm.
And so he's always thought about approaching this stuff with marketing really profitably, but also with a very data intensive approach.
Yeah.
And so I think that getting smart about data and really tightening up that presentation where the customer and the provider are really in sync about return on investment. I
Yeah.
think kind of we've been talking about kind of for a long time, data, but it seems like people are still fairly rudimentary in terms of how they present data and how they
Yes, I
consume
would
data.
agree.
And so I think that obviously bodes well for a business like you guys, where you had some maybe CFO who was fractionalized, kind of helping a $30 million D2C business kind of get along and update their spreadsheets once we. I mean, that's got to be real time. A brand can't afford to not know exactly what their SG&A costs and cost of goods sold are, and relative to their marketing spend. They need to be able to make real time data informed decisions. And so I think that both presentation as a provider, being you guys Bainbridge, and then that consumer, right? In your case, a consumer brand, or anywhere in the sort of provider and customer side, that their perception around ROI is going to be hypercritical.
Yeah. Interesting. Jack, we have 8 minutes, so there's a lot to go through because I want to make sure that listeners and know if they're a good fit for you. So let's start with Impatient VC. What are the
Yeah.
types of deals you are looking for, and would seek out?
Yeah, no, I appreciate that. So, yeah, my investment sort of career was very organically. I like to think of myself kind of as a founder first. And so I approach kind of my investing similar to how I think about starting a business, which is, am I excited to work on it? And then my excitement is driven first and foremost through people. I'm not naive to say that I'm just going to invest in somebody because I like the person, but it's much more of like an intuitive feel that like I have a good gut understanding of what I believe a good founder's kind of got the right sort of genetic makeup in terms of how they talk, the way they think, the questions they ask, the curiosity they have, even their sense of humor. I kind of say this somewhat whimsically, but I really believe that for me, from a culture building standpoint and from who I like to work with, I think a good sense of humor. I'll come off offensive to the wrong person when that at all. My intentions were not to be offensive in the least bit. And so I think for me, good sense of humor is a pretty high signal for aptitude. I think aptitude is a pretty dynamic thing, and so it's everything from curiosity to not taking anything too seriously, but of course taking things very seriously. So I think that for me, it's a very people first. I get excited by critical thinkers, dynamic thinkers, people that see the world in a particular way that I can align with. And then I like to collaborate. I like to be a thought partner. I like to break open doors. So for me, I tend to invest in stuff where I have some sort of a leg up.
Hmm.
Uh, Certainly in the commerce tech space, it was, unfortunately I missed you around at the tail end, but you guys would be a great qualification, the type of business I'd invest in. You're
Oh, thanks.
in a problem area that it makes a lot of sense, especially in today's world of needing to really get your ROI, your FP&A costs down pat, and have it be really accessible and accurate. So certainly, I look at the kind of SaaS 2.5 world as folks that are innovating in traditional software as a service. I tend to like fintech as well, where
Yep.
they're either consolidating a lot of different spokes into one unified platform. That's why I mentioned I like that company Capital
Yep.
.xyz, formerly Party Round, where they're consolidating, payroll, banking, cap table, fundraising into one unified platform.
Wow.
So they're not there yet, but they're kind of moving towards that. They
Yeah, they're
just
taking
launched.
on a lot of people. There's a lot of people that
They're
are.
taking on a lot
Yeah.
of people for sure, but they're not. But they're taking on a lot of people in the sense that they're not trying to really migrate people off of Ramp, Brex, Mercury,
Yeah.
and Rippling and Carta. They look at that as like, all right, those guys have built huge businesses, and there are huge businesses that are built off of those platforms. But they're looking at the next generation of startups.
Right. Haven't made those choices yet.
Exactly.
Yeah.
I certainly do look at some Web3 stuff, but I am hypercritical. I am not just in it to invest in a token that can get liquid in
Oh,
18
come on,
months.
they never go down. I mean,
Right, seemingly, although
yeah.
now they finally have, right? So it's like I think I was kind of losing my mind last year looking at crypto stuff. I mean, I definitely have made a number of Web3 investments, but I'm looking at these investments as 5 to 10 year bets,
Yeah.
not 1 to 2 year or even less than that kind of return on my investment. So I'm certainly along, even though my fund is called Impatient Ventures, it's kind of intended ironically in that like the world is very impatient and wants everything now, and
Right.
the best stuff takes time. So I'm certainly looking at just the next generation of like what is the best in class products, and that's driven, I think, in a combination through real product innovation on the sort of SaaS side, where they're actually they have an offering that you just literally couldn't do before. Really critical thinkers around distribution, so that they have the ability to create really meaningful unfair advantages from from a product distribution standpoint. So all things sort of sales.
Yeah.
And then for me, the reason I honestly spun up Impatient Consulting alongside Impatient Ventures wasn't to really just sell my whole portfolio, my consulting business, but it was I just had so many of my investments and my portfolio founders wanting more of my time.
Yeah.
Like, all right, I got to make sense of this, and so I got to kind of start to charge for over and above time that I'm spending kind of working
Yeah. That's interesting.
on this. And so it was really, I didn't even think about that. I just eventually had some of my portfolio companies sort of say, hey, can we pay you to come in and do this? And I was like, I guess I kind of thought this was a separate church and state model, and I just had to kind of do as best I could to manage my time. But because I'm making 10-year bets, I got to pay, I got to pay the bills. I live
Yeah.
in Los Angeles. It ain't cheap here. So it's been fun, and I enjoy it. And then from a marketing standpoint, I mean, we work with consumer businesses, so it can be digital products or physical products, but we work with some of the leading brands, Oats Overnight, and Black Buffalo and Mad Rabbit, some of whom are clients or soon to be clients of you guys, which is great because
Yeah. It's awesome.
us as an agency, we tend to also be very focused on being able to create our own internal representation of what profitability looks like. Most agencies don't really focus on that. For us, our pricing model is built around how much they spend on marketing. We don't have any retainers. So,
Nice.
we like to work with consumer businesses where we can like the people we work with, where they trust us, we trust them, and we can integrate really well.
Yeah.
Because if you don't have that kind of like ability to like the person, then you're never going to trust the person, and you're
Yeah.
never going to work together. And so, you're not going to like everybody you do business with in your life, but the closer you can get to that, to me, the more fruitful, the more motivated both parties are, the less you're looking over your shoulder, the more you're willing to indulge mistakes, right? Because
Yeah.
mistakes happen. So, yeah, I mean, that was a little bit of a mishmash, but still actively investing, super excited about it. And, I think that the next generation of startups are going to be really interesting. I think we're kind of going through a portal right now into the sort of next generation. So certainly
Yeah. I
consider
think
you
it's
guys
exciting too.
class. So yeah.
Well, Jack, thank you so much. I really appreciate your time. It's fun for me. And
Yeah.